The Stock Market Trading Video Course, Part 3. Charts and Technical Analysis. In this section, we're going to go over charts and the different time frames to trade, such as minute, 5 minute, 15, 30, hourly, daily, monthly, weekly charts, all those. We're going to go over how to draw trend lines and also how to draw support and resistance levels. We're going to go over different indicators and the Fibonacci retracement. And then we're also going to go over RSI, pivot points, moving average lines, and a couple other things. So let's jump into the Thinkorswim platform. And what we have here is we have an Apple. This is a daily chart. Okay, what we're going to do is we're going to first start off on a 1 minute chart. As you could see with the 1 minute chart, and this is regular trading hours only. For futures, I like to use both regular trading and extended trading because they trade 23 hours a day usually for something like the EMA S&P futures. But for stocks, I actually like to use regular trading hours only. The reason being is I could see where gaps are. So for gap fills, all these different technical places of where price potentially could stop. That's all technical analysis is where do you believe there's going to be a supply or demand place, right? Where do you think the buyers are going to give up and the sellers start to short the market, or where do you think buyers are going to start to enter the market? And it's as simple as that, okay? So different time frames to use. As you could see, this is a 1 minute chart over the last 2 trading days. Okay, we're able to really see different levels, right? We could see we made a high here, we made a double top, actually a triple top here, here, and then we failed. Double top, right? Failed. We actually kind of made a inverse head and shoulders down here. If you kind of look, you have, think of it as a regular head and shoulders, right? Just flip that over. What head and shoulders is you have the right shoulder, the left shoulder, and then the head, right? And this is just kind of upside down. This is actually a bullish pattern. A head and shoulders, you would actually see it flip to the upside, and that would be a bearish pattern, okay? So with that being said, the 1 minute just gives us a totally different time frame to look at the markets. Next, we could look at a 5-day, 5 minute. Okay, you can't see here. We could still see that triple top, right? We could see the inverse head and shoulders. We could see highs and lows. We could see price came down here, we came down here, right? But if you look, we're making higher highs and higher lows and so on, okay? So right here, we made a low, we made a high, we made a higher low, right? A higher high, a higher low, higher high, higher low, and then we made that triple top, right? And then what happened was the minute we broke below here, right, we've now made a lower low. And then if you look, we made a lower high, right? So we rally, can't break above this. And the minute we break below this low, then this actually becomes the lower high. Okay, so here we could see we made a low and now a high. Okay, now what happens is the minute we break above here, then whatever the lowest low is here, okay, or sorry, the lowest point, that's going to become more than likely a higher low. So if we rally all the way up here, and let's say price is up here tomorrow, well, then we would say this is now a higher low and the trend has reversed. So different ways, real basic charting, okay? Let's remove drawings. Okay. So now let's look at a 15-minute. This is a 20-day 15-minute. As you could see, we're starting to see more and more data, right? We're seeing different ways, potential we could draw trend lines, right? But we'll get into that in a few minutes. But we're able to see more and more data as we go to larger and larger time frames, right? Let's go to a 20-day 30-minute. Every candle represents a 30-minute candle, right? So here you might have had 6 or 7 candles because there's only what is it, 6 so 12 30-minute candles because there's 6 hours, right, in a trading day. Go to the 1 hour, every candle represents 1 hour of time, right? So price went from here to here, all within that 1 hour. We look at daily, okay, kind of the bigger picture, which way's the overall trend. Well, look, we were making higher highs, higher lows. Now we're making lower highs and lower lows, right? We then could go to a weekly chart, okay, and this is what Apple's done. Every bar represents a week. Okay, so we could see, hey, look, when price broke out, we could see where previous highs and lows were. Okay, very clear. Right here is a low of 92. Guess what? If price comes back down to 92, maybe I want to be a buyer for the very first touch. And then we could go all the way out. We'll go 20 years on the monthly chart to see what Apple's really done, right? Back in 1998, Apple was a 60-cent stock, right? Now it's $140 stock, or was $140 at the highs. Okay, that's a pretty good return. That's the long-term buy and hold. Now, such as the different indicators, okay, what we're going to do is we're going to start to draw trend lines, right? We're going to take our trend line, and we're going to start to draw trend lines. And as you could see, all we're doing is we're matching from one point to another point. That's it. And as price comes down, we're going to look to potentially be a buyer. We can also draw trend lines straight across. Look for support and resistance. We know this was a high, right? Up here. This is a swing high. We could say this is a swing low. So we now are starting to see support and resistance levels by drawing trend lines. Now, if we go to a daily chart, okay, we could start to draw on a smaller time frame. This is a double top, right? Right here, we actually have a gap where price closed, and then we opened the next morning down here. But the high of that gap was right here. We weren't able to ever fill that gap. Okay, so this still gaps usually always get filled. They may take a long time, kind of like this gap fill, right? We gap higher here. We closed here and then we gapped up here. Well, it took probably a good 7 months before we filled that gap, okay? So we have a gap up here. It could take years. It could be done in the next couple weeks, so we never know. And then we could go down to smaller time frames and look for, on the smaller time frame, we could draw, okay, hey, look, we have support levels here and here, right? Just kind of like if I drew this line here, but this is all we saw, well, as price is we actually move price forward, right? We're actually going to see price actually came down, bounced off, came down, bounced, and then we failed. Okay, so old support becomes new resistance on the way up. And that's just a real simple way to draw trend lines. What we'll do is I'll have other videos along with this video on exactly how to draw trend lines and to go more in depth on all this. So So that's something that you'll see for drawing support and resistance levels. Okay, next up that we're going to look at are different indicators such as the Fibonacci's, right? So with Fibonacci's, what we do is we look for measured moves, okay? And there's a video that will go over exactly how Fibonacci's work. But as you could see, we're going to take a low from here to high. We see price bounce. We get to 38, we fail. Get to 50, we fail, right? If we get up to the 61%, what do you think will happen? Sellers will step in more than likely. Okay, so Fibonacci's are a great way for kind of figuring out where potential targets also could be. You could use them on very small time frames. Okay, kind of this inverse head and shoulders that we first started talking about. If I just draw this, right? So we have a shoulder, the head, the right shoulder, right? Here's the neckline. If we take that and we flip that over, so from 100 to 50 and then 50 all the way back to 0, right? That's a 100% move of this. Look at what price does. Goes exactly to it and rolls back over. Okay, so these are things, again, there's a video on how to use the Fibonacci's that we're going to go over. So next up, we're going to talk about pivot points. Okay, pivot points, and let's add pivot points right here. Okay, and these are just levels based off the previous day's high, low, and close. Okay, they're calculated levels, and as you could see, price open, we kind of bounced around here, went down, bounced off the lower pivot point, and rallied. Got back to this pivot, we pulled back, right? Chances are if we got up here, you'd see sellers step in, right? Come back down, buyers start to try and step in. Pivot points are going to be more like support and resistance levels. And then finally, we're going to look at moving average lines, right? So let's, I like to use the exponential moving average line. One of the ones that are very common are the 200. You could use it on any time frame, but usually the 20, the 50, the 100 and 200 are the most widely used. And you could see every time we come to the 200, buyers step in, right? We fail, come up, you see buyers step into short. But then the sellers, but then the buyers overtook it. Buyers step in on the bounce here. Sellers step in as it rallies, right? And then eventually we rally, we come back down, and the buyers step in again. You could use the moving average lines as support and resistance levels. They work on all time frames, okay? If you look at a 15-minute chart, you'll see price gets extended, it usually reverts back to the mean. We could rally all the way back to it. In the very first touch, you want to look for the short. Okay, go to daily, hourly, it's all going to be the same. You'll see it over and over and over. Right here, get too extended, rally back, the very first touch. So if we get ahead of it too high and pull back, then you'll see the buyers step in. And again, I would, there will be a bunch of other little video courses about 15 minutes long for each one of all the different trading strategies and how to use the Fibonacci's, RSI. This down here is the RSI, right? Relative strength indicator. What I like to use this for is for divergence, okay? As you could see, where is it? So we made a high here. Actually, so here you could see a divergence, right? As price is making new lows, the RSI is making higher lows, okay? So real quick, and again, there's a video on this that you'll see, but right here, okay, this is divergence. What happens? Buyers step in and they move up.